I think in the near term, our technical strategist Mark Newton thought we could be seeing 4,000 before the end of the month for Ethereum, but that's not where it peaks. He just thinks that that's the first target. And then I think something, if Sean Farrell's math is correct, then I think 10 to 15,000 actually makes sense too.
By the end of the year?
It could be end of year, it could be sooner. I mean, it just really depends. But that wouldn't be the cap, but that just shows you that's really, a level above 5,000, it would be a decisive, all-time breakout for Ethereum. So I think that's a significant level to watch as well.
Tom Lee makes it clear he's still a fan of Bitcoin. It's the digital equivalent of gold, the most trusted store of value in the crypto space. And if gold has a $22 trillion market cap, then Bitcoin still has room to run to $1 million per coin simply by matching that status. But Ethereum is different. It's programmable money. It allows for the tokenization of real-world assets, deployment of smart contracts, and seamless interaction with artificial intelligence. Ethereum is the platform layer, not just the asset.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I think Ethereum, is a chain that I think is getting a second look. I know that there have been criticisms of it in the past because of either how layer 2s and layer 1s interact or just really sort of progress and upgrades to the network. But to us, I think the real thing we have to recognize as we look at what's happening in the real world is that Wall Street is converging onto crypto, and they're choosing to do a lot of this work on Ethereum because stablecoins have completely changed Wall Street's mind about how useful crypto can be. As we've said, the stablecoins have created the chat GPT moment for crypto because we're seeing consumers really use it in a viral way. Merchants are beginning to really love it, especially outside the US, and now banks are realizing it's actually a decent business model. We just saw Citigroup even just say that they're looking at creating a stablecoin, even if it's just to manage deposit base, but still, it is really Wall Street converging onto crypto. And at the end of the day, a couple things are going to be important. Wall Street wants to find a chain that's operating compliantly in the US, and they want to find a big one, and where there's already a lot of real world assets, tied up and on the layer 1. And that's why Ethereum, we think, is going to become extremely relevant over the next decade. And I think it's important for people to kind of have some framework in mind. We're still adamant fans of Bitcoin because to me, Bitcoin is, first of all, it is really the ultimate form of trust at the moment, and it is digital gold in an easy way. And if someone says, well, what does that make it worth? Well, gold's 22 trillion network value, so Bitcoin should be worth $1 million. And there's plenty of future businesses that can be built around Bitcoin because of its stability. Ethereum is a smart contract enabled platform, and so it is unique because you can actually store real things onto the blockchain, whether you use layer 1 or layer 2. And I think maybe the real killer app, and this is what stablecoins are showing, is that as we move into a world of like AI and we're trying to create, units of pricing and to simplify the movement of goods and things, simple examples of like tokenizing things from the real world onto a blockchain, you couldn't do it really on Bitcoin because that's not what Bitcoin's designed to do. So I think as you're thinking of Wall Street converging onto crypto and then AI innovations taking place and the idea of using even tokens or stable coins around that, well, then that's really when it comes to saying, well, Ethereum really is the largest smart contract platform in terms of network value. And that's what makes it attractive. I generally agree with people who say crypto responds to global liquidity. And so if central banks are easing, then we should see it in crypto prices first. And that's why crypto actually is a leading indicator for the stock market. And the fact that Bitcoin broke out to all-time highs is actually bullish for the S&P. But the interesting thing is that crypto is still not that widely held. So I think that, Bitwise has a great stat. They say 95% of Bitcoin's been mined, and only 95% of the traditional finance world doesn't own Bitcoin. So there's a real mismatch. And so I think Bitcoin continues to be the leading crypto asset to watch. But to us, as risk appetite recovers, Ethereum and small caps are pretty highly correlated. And I think that that's why Ethereum, in percentage terms, has more upside for the next few years. But guess what? Now there's many, many, many venture-funded businesses around using AI and ChatGPT that are exploding and getting to $100 million run rate so quickly. Well, I think that's what's going to happen in crypto. I think this is a really big moment for the industry to realize that as Wall Street converges and they're bringing a lot of interest and bringing a lot of new users and a lot of new applications, that this could transform actually the importance of smart contracts and Ethereum. So I think Ethereum's sort of dominance could actually grow dramatically. If we look at Circle and its free cash multiple, which now is like 130 times EBITDA, on an equivalent basis, Ethereum's closer to 15,000. And that makes sense. I think the layer one, as you get into layer one, you should apply a higher multiple to like sort of theoretical usage, because it's the same reason software companies get higher multiples than retailers, right? The more you're getting away from the customer and the more it's pure signal, you apply higher multiples to that business. And so I think in the near term, our technical strategist Mark Newton thought we could be seeing 4,000 before the end of the month for Ethereum, but that's not where it peaks. He just thinks that that's the first target. And then I think something, if Sean Farrell's math is correct, then I think 10 to 15,000 actually makes sense too. By the end of the year? It could be end of year, it could be sooner. I mean, it just really depends. But that wouldn't be the cap, but that just shows you that's really, a level above 5,000, it would be a decisive, all-time breakout for Ethereum. So I think that's a significant level to watch as well.
Regulatory clarity is still developing, but Lee isn't overly concerned. Yes, there are unpredictable moments in Washington, but overall, he believes the U.S. is in a much better place now compared to the regulatory chaos of the past decade. The financial industry, from J.P. Morgan to Citi, is now actively engaging with crypto, particularly stablecoins. But make no mistake, stablecoins are both a friend and a threat to traditional banking.
At the core is our belief that Ethereum is dramatically undervalued as a token. And for the reasons I described, that crypto is seeing its ChatGPT moment, and really the second order beneficiary there is Ethereum. And so acquiring an asset that can appreciate by 10 times or more is a really good use of a treasury. In fact, MicroStrategy, when they began their treasury strategy, Bitcoin was 11,000 and it's 120,000 today. And so I think that's foremost where we're coming from. And some people say, well, why don't you just buy Ethereum outright? Well, an Ethereum treasury company can actually increase your ETH holdings per share by taking advantage of capital markets and volatility to raise capital. And they can also earn money from staking. And for instance, BitMine initially funded with $250 million of ETH, and that was closed on July 9th or July 8th. And then 3 days later, BitMine increased the treasury holdings by an additional $250 million. So in just 3 days, doubled the amount of treasury holdings, and that was as of Friday last week. So you can see that there is an advantage to a treasury company, because what you thought you had was of ETH relative per share just doubled in 3 days based on just the company acquiring more ETH. And of course, that activity continues. So I think that there's an advantage to owning a treasury company that is using capital markets to increase your ETH holdings per share. Well, there's always going to be an initial reaction, but then, the long-term reaction. I think, nobody can really ever correctly predict how Washington what path it chooses and what bills pass. But I think the reality is that crypto regulation is vastly improved over what we saw for the last 8 years and 12 years. And so I don't think anyone should be too discouraged by developments in Washington, but they should, of course, watch it closely. And then keep in mind that you can always have some things fixed through either reintroducing items or executive orders. So I wouldn't read too much into whatever happens out of Washington. We're in the middle of earnings seasons, and financials start to report in earnest, this week and next week. But there have been a lot of comments from these financials about stablecoins, and stablecoins are frenemies for the financial industry. So I think that's just something people have to watch out for, because they are both a opportunity, but it's also a threat to their legacy business. So you have to keep in mind that in some ways, the financial industry is one of the strongest and savviest lobbying groups, that they have a role in how crypto regulations can pivot in either direction. And let's say Facebook was the cash cow for Facebook, which it is for Meta, but then came along Instagram, which was a very different way for people to interact. And then TikTok came along. And as you know, TikTok completely caught Meta by surprise. And if Meta had only invested in Facebook, the company would be a dwindling business. But they, of course, correctly made the pivot both to Instagram, and then to TikTok, with Reels, etc. Well, in financial terms, the banking industry has not necessarily been that quick to recognize that an increasingly digital world means money is increasingly purely digital, and it's actually breaking barriers, And then if we look at the next iteration, it probably blurs what is the definition of money. We've already seen that blurring with loyalty points, etc. And so banks make a lot of money from traditional financial systems. It's 4% of global GDP is earned by the banking system. And whether you look at interchange, Visa earns 2 to 3% for being in the middle of a merchant transaction. These numbers drop dramatically in a digital world where trust is established through the actual blockchain itself. So that's what we have to realize is what is like the TikTok moment for Facebook.
Lee wraps his thesis with a bold statement. Ethereum is the second-order beneficiary of crypto's ChatGPT moment. Just as AI exploded in real-world use cases, crypto is now following a similar curve, with stablecoins, tokenization, and AI integrations lighting the path forward. If the pattern holds, Ethereum won't just catch up, it will lead. And assets with the potential to 10x or more don't come around often. That's what makes Ethereum's current price point a compelling entry for long-term investors.